He said that he's going to join at the very last minute, but for now, we also have Sawad in the room. I think he's going to join in shortly. So yeah. Okay, we have around 60 people in the room. Welcome everybody to this session. My name is Mehad, and I'll be your host and moderator for this insightful Ask Me Anything session on startup investments in Bangladesh, which is being organized by five key partners. First of all is the Startup Bangladesh Limited, which is the largest government-backed VC fund. Then we have Anchorless Bangladesh, a leading US-based VC fund focused in Bangladesh. Then we have Bangladesh Angels, which is the largest angel network here in Bangladesh. We also have BD Startup Founders, the leading firm of Bangladeshi startup founders. And lastly, we have LightCastle Partners, a management consulting firm based in Bangladesh. So we have assembled a panel of experts representing venture capital, government fund, angel network, and startup to share their experiences and insights. We had over 300 registrations and collected some of the most interesting questions from the ecosystem. We'll bring them up to your panelists and hear their experienced opinions on these topics. But first, I'd like to introduce our panelists. First of all, we have Hassan Pai, who's the head of investments portfolio at Startup Bangladesh Limited, the $65 million VC fund backed by the Ministry of ICT. His career spans more than 20 years of work experience with expertise in private equity and investment management, and includes many senior management positions in financial services and technology management companies in the USA. In his previous role, he has worked as a vice president for State Street Corporation, one of the largest asset management companies in the world located in Boston, Massachusetts, USA. Next up, we have Nirchar Bhai, who is the CEO of Bangladesh Angels. Nirchar Bhai is he's the CEO of Bangladesh Angels, the country's first angel investment network, which connects startups with smart capital via individual and institutional investors. He brings with him more than 10 years of experience in the development sector. Then we have Rahat Pai, who is the founding partner of Anchorless Bangladesh, an early stage venture investment fund focused on advancing the local startup ecosystem through access to global resources. And lastly,
we lose Mehad.
Yeah, I think Mehad got disconnected. Let me take over. What can I do? I mean, internet always can happen. So I think we had Rosinap introduced, Rahat introduced, and Hassan introduced, right? And I don't think Nirchar is in the room yet, right? Jawad, are you in the room? Oh, no worries. I think let's proceed anyways. So we'll be starting with a short presentation of what happened during the 2022, like quick overview from Raida, who is a business analyst at LightCastle. And then after that, we will directly go to the Ask Me Anything, ask the panelists anything session, where we have already collected a few during the Google form that we send out, very interesting ones. And then we'll also open this up to everyone in the room as well. So with that, Raida, over to you for a quick snapshot of what happened in 2022 in the startup ecosystem in Bangladesh. Raida, over to you.
Thank you, Bijan Bhai. Let me quickly pull up my screen and share. All right. Hi, everyone. Thank you for taking the time to join us in this session. My name is Raida Moshed. I am a business analyst at LightCastle Partners, and I am excited to present the annual edition of our Startup Investment Report for 2022. Before we jump into analyzing the startup investment trends in Bangladesh, let's take a moment to see the global context. 2022 was a turbulent year, not just for Bangladesh, but for the whole world. We saw countries slowly recovering from the COVID-19 pandemic, but we also saw economies disrupted by supply chain issues from the Russia-Ukraine war. We have also seen economic slowdowns and rising inflationary pressures around the globe. Overall, these shifts in the global economy resulted in a 35% drop in startup funding worldwide, from $630 billion in 2021 to $415 billion in 2022. While the funding slowdown has been experienced globally, Asian startups in particular have felt a stronger impact in their ecosystems. Even in the strongest Asian startup hubs, such as Singapore and China, we have seen around 50% drop in funding in 2022. Compared to even peer countries such as Pakistan, Bangladesh has had a particularly strong drop of 73%. Let's take a look at the Bangladesh economy first. As a country, Bangladesh is at an interesting stage for startups to seize opportunities. We have a large and growing population of around 170 million people. We have sustained a strong GDP growth rate throughout the pandemic, maintaining 7% GDP growth rate now. With increased digitization through wider use of mobile phones and internet, as well as a growing number of affluent consumers and a younger demographic, Bangladesh is at an excellent position for startups to flourish. The startup landscape in Bangladesh can be said to have started in 2013. For the first 5 years, investments hovered between $10 and $20 million each year. Funding really picked up in 2018, when the likes of bKash and Pathao drove up investments. 2021 marked an all-time high, with startups raising $415 million. This is largely owed to the bKash SoftBank deal of $250 million. Finally, in 2022, we have raised $112 million. As you can see on the right, more than half of this came from ShopUp deal with Valar Ventures and Flourish Ventures, where they raised $65 million. Trends from 2022 show that we have increasingly shifted from relying on global sources to local sources of investment. The funding contribution of local investors was at 8%, a huge hike from 2% in the previous year. Local investors also dominated the majority of deals made in the year. From 47 deals made in 2022, 26 of the deals were made by local investors. Visualizing the source of funding, we can see global investments in shades of blue in the graph to the left. In the ShopUp deal, which is colored in dark blue and others in light blue. If we exclude the $65 million ShopUp deal, we can see that local investments made up nearly 20% of all other fundings raised. On the right, we can see a breakdown of investments per investor type. Venture capital firms made up the largest portion of investments, raising 79% of all investments. We can see a further breakdown of investors of 2022 here. We have venture capital firms such as Sturgeon Capital, Valar Ventures, Flourish Ventures, Anchorless Bangladesh, and SBK Tech Ventures, who raised nearly $90 million. We also have accelerators and incubators such as Surge and SM Square Accelerate. We have Bangladesh Angels Network. We also have impact investors such as Binyog Brithi, as well as corporate investors, such as Ecom Express. We can see a further portfolio of investors here, with global investors marked in blue and local investors marked in orange. As you can see, we have a large number of deals coming from Startup Bangladesh Limited and Bangladesh Angels Network. Here we have a heat map comparing the sectors that received the most funding in 2022 and 2021. Financial services, including embedded finance and fintech, remained the star sector in both years. Logistics and mobility remained in second place. A few sectors that we see gaining more traction are education, e-commerce and retail, and travel and tourism. We have had a large chunk of investments in the education sector, thanks to startups such as 10-Minute School and Shiko. In e-commerce and retail, we had notable startups such as Chaldal and PrioShop who raised funds, and Go Zion and ShareTrip raised funds as well from the travel and tourism sector. We also have a list of the top 10 deals of 2022. These are disclosed deals only and not an exhaustive list. But we have ShopUp, which raised $65 million, followed by Paperfly, Go Zion, Shiko, 10-Minute School, a very rich list of startups and different sectors. If we see 2022 in a timeline, we see a very rich year in terms of startup investments in dark blue and events in blue. This list is not exhaustive and includes disclosed deals only. A large chunk of the deals is headed by Startup Bangladesh Limited, who led over 15 deals. We can see the ecosystem maturing as more mergers and acquisitions pop up, marked in light blue. We have also seen increasing government initiatives to support startups, marked in orange. Moving forward, what kind of trends can we forecast for this year from what we have observed in 2022? Number one is continued funding slowdown. As recessions continue in 2023, so will funding slowdowns. But we are hopeful that by the beginning of next year, investments will pick up. Number two is a focus on climate and sustainability. Climate change is one of the most pressing issues of all time, with Bangladesh being at the forefront of its impact. As a result, startups which focus on sustainability and climate are becoming more attractive for investors. We are also going to see more first-time global investors. In 2022, we have already seen local investors stepping up to fill in global funding gap. But we are also seeing more global investors who are investing in Bangladesh for the first time. As the ecosystem gains more traction, we can be hopeful for this to continue. Number four, more startups with an international holding company structure. With the recession pressing down in the West, we are seeing more and more startup founders who are returning home from abroad to set up their ventures here. At the same time, we are seeing startups emerge with holding companies abroad, with the Bangladeshi entity acting as operating company. Number five, more unicorns. We have seen a huge amount of support from the government of Bangladesh towards the startup sector. As this continues, we can hope to see at least 5 more unicorns in Bangladesh by 2025. I would like to end our report with a thanks to our partners, without whom this would not be possible: Startup Bangladesh Limited, Anchorless Bangladesh, Bangladesh Angels Network, and BD Startup Founders. With that, I will hand it back to Mehak Bhaiya to begin the Ask Me Anything session.
Thank you so much, Radha. That was a very insightful overview of the startup investments landscape. And right now we are going to start the session that we've all been waiting for. I think I'll start off with Rosinapa first. Rosinapa, are you there? Hi, Rosinapa, fantastic. So I got this question from Zunaid Al-Hassan, who's the founder of Aviator, as well as MSI Saqib, founder and MD from Photon Tech. They've asked that how can a startup founder successfully raise angel investments during the pre-revenue stage? And how do you do valuation when there is very little traction? Considering that you have experience of raising early stage investments during pre-revenue, I think that would be a great insight if you could share with everyone.
Sure. Well, thank you for inviting me today. It's great to be with you guys to discuss our experiences, and I hope it helps. So just touching on the question from Junaid, I think initially your idea has to be good. It needs to be something that holds water. So that's your first thing before you start raising any investments. Do you have a good idea? And I think when it comes to early stage investments, maybe your first investment in, what you really need to do is you need to be able to sell that idea, and investors are really looking at you, the founders and the co-founding team. I think if it's pre-revenue, pre-idea, pre-product, they are really looking at you. Are you the person that can back this idea? Are you the person that has the passion and the vision to see this idea to be a unicorn? And are you the idea that can by all means execute? So I feel when we were doing some of our early stage fundraising, you could tell within the first 2 minutes of a meeting, and a meeting is normally only 30 minutes. You can normally tell just from the rapport, just how you're saying hello, if they like you or not. So you as a founder really need to know how to communicate. If you don't know how to communicate, find someone to be part of your team who can communicate. And then you have a short amount of time to actually pitch. To break that 30 minutes up to the first part of the meeting, where you've got that rapport building, then you've got the actual pitch, and then you've got the closing remarks. What are the actual takeaways? Are they interested? What are you going to give to them? What have they asked from you? So I think that is really important when you are trying to do some of your early stage, initial funding. When it comes to the actual valuation side of things, this is just like a hot topic. We as founders want to have the biggest valuation, and investors obviously want to have the lowest valuation. So you kind of want to sort of find something that's sort of in the middle. And a valuation is really about a negotiation. It's not really a fight. You do need to negotiate. And you should look at sort of regional comparables, success stories of similar startups, how they started, what valuations did they start at. You need to look for signs of market validation as well. So the demand or the gap in the market, are you solving for actual problems? Are you the first to market for solving for actual problems? And that these problems that can then be turned into sort of money opportunities. So coming back to the valuation side of things, as a founder, it's important not to get too bogged down on it. I think it's important to have good quality investors rather than actual worry about this massive valuation. You need to find someone who can then connect you in your next round to your next round of investors. Who is the most well connected? Think about those things. That's far more valuable rather than getting bogged down on the actual valuation side of things. Definitely look at other Bangladeshi startups and what they raised at. When we were doing our round of funding, we of course wanted to get a higher valuation than the other Bangladeshi startups, which were, I think, raising around the 5 to 6 million valuation. But we believed that we, as our startup, was in a different journey, different space. We had product market fit, we had demand, we had good traction, good co-founding team. So we highlighted those points, and we managed to get a slightly higher valuation. So you need to think about all of these things and negotiate. The most important thing is actually negotiating when it comes to this. I hope that answers the question.
Thanks, Rosanna. But just to follow it up with your previous answer, do you think the SAFE instrument also helps you to lock your valuation a bit quickly during early stage?
Yeah, I think a price round, there's a lot of timing, there's a lot of paperwork involved, while SAFE is just so easy, it's quick, it's efficient. And I think when you're in an early stage, early stage sort of discussions with investments, you want something that's quick. And a lot of investors sometimes make very quick decisions. And as soon as you can send them the safe note and your bank account details, it can be as almost quick as half a day, and then the money's in your account. So always think about what makes it easy. Even when sending your pitch deck, make it easy. Don't password protect it, just make it easy so someone can see it quickly. Make things easy for investors. They see founders all the time. They're looking at pitch decks all the time. They have 30-minute meetings all the time. So just try and make things easy and clear for whoever you're speaking to.
Thanks, Rosanna. I think that's very important. So from the key points that I've taken is you need to have your communication on top of yourself so that you can pass your idea very easily to the investors, and so that it actually helps them to close the round as quickly as possible. All right.
You need to really be able to communicate your idea very simply. If you practice it with other people, if say 2 sentences about your startup, if they look confused or don't get it, it's not good enough. You need to be able to be very clear about what you're doing. Investors don't have time, so you need to be super duper clear.
Perfect. Next, I'll go to Hasanari Pai from Startup Bangladesh. Hasan Pai, so we have a question from Rakib Ullah, who's the co-founder of Sequoia Limited. He has asked if you could provide a bit of information regarding the investment application process for Bangladeshi startups seeking funding from Startup Bangladesh Limited. Additionally, if you could also share what is the type of fund's typical investment amount and what are the primary criteria that are prioritized during the investment evaluation process?
Thank you, Mihad. Thanks for the question. That is a very good question, right? Because a lot of times startups may struggle what are the documentation to provide when they are interested in investments, whether with Startup Bangladesh or any other VC firm. So from a Startup Bangladesh perspective, I mean, if startups, they go online, they can apply online. I mean, we always ask, even if we get the startup through scouting process or by any other means, we always ask to apply online, where we ask for a number of information. For example, obviously, of the founder, right? Founder, co-founder, their background, their resume, and the company-related information, such as company's description, address, and since when it was registered, etc. Some basic information. Then we would also ask for their pitch deck, their social media link, any video link, their financial data, their client information, for example, the B2B, B2C, and so some of those information, and those are important. Their history of fundraising, how far they've gone, how much, what kind of round they are they actively in a round, or sometimes they do bridge round, and etc. So those are the things that we ask in the application form. Obviously, in the application process, we don't ask too many information, just the basic ones. And once they fill out the application, we gather the data. And after gathering the data, we go through some initial screening and see how it fits to our investment philosophy and our investment strategy. And once it goes to the pre-screening process, then obviously we ask for a lot more data for our business due diligence, financial due diligence, legal due diligence, etc. So we do that. But those are some of the initial documents that we ask. So in this regard, I would in the audience there, the startups especially. So when you apply, make sure you apply. Whenever you start the startups, right? Make sure that you guys are compliant from the all regulatory perspective, like your tax, VAT, etc. Doing your audit of the financial data, making sure your RJC filing is all up and up, right? Your cap table matches to the RJC filing, etc. Because if your company is not compliant from regulatory perspective, will invest, and other VCs also that they will not invest. So make sure that you are keeping up with the regulatory compliances. I know startups are all busy doing to expand their business and raising fund and everything, but regulatory side is very important for them to keep in mind also. So that is from the application perspective, I guess, right? And then you ask, I think, about investment, whatever, the investment range, right?
Right.
So, so we in a broad sense, we invest in early stage and growth stage. Early stage, you can say there's seed, pre-seed, or pre-series A, etc. So anything that pre-series A, that'd be early stage. And from a startup Bangladesh perspective, our investment is maximum 1 crore taka. And for the growth stage companies, those are in a one round is maximum 5 crore taka. Obviously, we do follow-on investment. The startups that are doing well and what need more funding, we do further investment. We have done it in the past also. So follow-on investment we do. And but since the Startup Bangladesh is a strategic initiative by the government of Bangladesh, we want to spread the wealth, right? So it's not like a VC firm invest $50 million in an exciting startup. We can do that because we want to spread our investment across many startups so that we can support the startup ecosystem. So that's why we have a range, so to speak. But we are looking into some other type of investment like impact investment. That's why we may give a smaller investment amount for very early stages. So that's what we are contemplating now. But at this moment, we have early stage and growth stage, 1 crore and 5 crore taka. So that is the investment amount, right? And in regards to what we look for, right? The primary criteria, I think, excuse me, for the investment evaluation process, right? And it is, we don't do anything differently than any other VC firms, right? It is like, as Rosina was saying, the founder, their vision, can they execute? Those are the things. Those are very obvious things, right? Founding team, who the founders have around them at CXO level, right? Founders may have a great idea, but they may need the operations, somebody who can run the operations, right? Somebody can do marketing, can do fundraising, etc. So that well-rounded team is important. Although at the beginning, it's hard to build a well-rounded team, but that should be the vision for building a well-rounded team. From a startup Bangladesh perspective, we need a startup that has at least 2 co-founders, right? And our preference is that one of them has to be a tech expert, right? Because the startups are primarily technology based. So we want somebody with an excellent technology background. So that's one of our requirements. And when we go through that, obviously we see what kind of innovation they have, products, technology, and the timing of the product, timing of the business, the traction, scalability, right? They may have a wonderful product, it may not be scalable, right? Or it may not be viable. It may be tough to get clients. The client acquisition cost, how much is going to cost them for B2B or B2C client acquisition, right? And another thing that we really focus on from a Startup Bangladesh perspective, I mean, when you look at the, evaluate a startup and their impact, right? There are primarily 3 impacts of a startup. One is economic impact, one is social, one is environmental. We look at all 3 impacts, right? We want to make sure the startup, it could be excellent business, very profitable, but may have negative social impact or environmental impact. We want to invest in that. So from a Startup Bangladesh perspective, it is very important that it meets those criteria, right? So we value a startup that has social and environmental impact, but may not have that much of a impact to become a unicorn. But if they can become a sub-unicorn with a great social and environmental impact, we'll definitely entertain those. Those are the important things. And obviously, we look in the competition, at the first mover, or they can sustain in the market. with other competition. Those are the things. And market condition and the timing, right? I mean, with the current economic downturn, how they're gonna survive with or without funds. So those are the things we look at through the evaluation process, some of the key factors. I hope that answers your question.
Thank you, Azam Bhai. I think there are a lot of follow-up questions to your answers in the chat room. For example, a lot of people are asking, like, why do you need two founders? I do understand that that's probably from the risk mitigation part. Also, whether SBL funds idea stage companies or the companies have to be registered as a limited private company.
Yeah, it has to be a registered limited company. So from the idea perspective, we do not invest in the idea stage because in our ICT division, we have another project called Idea Project, right? In Idea, all the early stage, idea stage startup, they go through that screening process and they give grant for the idea. And then when they kind of graduate with the grant and other investment and gets to a level that they have some traction, some metrics looking good, doesn't have to be highly scaled up or anything, but they are present in the market, they have some clients, right? Again, it's like pre-Series A company that you can think of. So that's why we invest, because in the idea project, we give grant to earlier stage companies. And I mean, as you said, Mihad, two co-founder is the risk mitigation, right? I mean, you can start up with yourself, a founder, but when we start talking and we see there's only one founder, we encourage them to bring a co-founder there, right? So it doesn't have to start with the two founders, but you can definitely bring in additional co-founder strategically. So that's what we look for.
Thank you, Hassan Bhai. That was very, very important. Next up, I'm going to move to Rahat Bhai from Anchorless. Rahat Bhai, we got this question from Zainab Khair, who's the founder of Kinso. He has asked that, what is the most effective way to safeguard ourselves, which is the sort of founders, against investors who are losing motivation as a result of the recent economic downturn?
Okay, I'm not really sure what that means. I've said this before and I'll say this very clearly. The Bangladeshi startup ecosystem can absorb all the money that's interested in Bangladesh. As in, there's more money looking at Bangladeshi startups right now than the market can actually take in. That is a good thing. What we need to understand is for an investor to commit to a deal, a few things need to be obvious. So for instance, can the founding team actually build and scale this product? 2, does the founding team have the experience to take that money and build, so one is the product and is also the management of the team. One thing that is a common issue in Bangladesh is, respectfully, and I know there are some young founders here, but when your team goes from 5 people to 100 people, if you've never managed or worked at a larger organization, it is reasonable for the investor to be skeptical of the ability to actually manage a large team. So bringing in a potential co-founder or a senior manager who can fill in that gap, you need to be able to show that you can actually do that, indicate that. 3, in terms of market opportunity, whether it's in garments, agriculture, fintech's a little tougher, logistics, and especially in places like SaaS and other kind of like technology-based products, the market opportunity is fairly massive. So I don't think I have to say that healthcare for a majority of Bangladesh is wide open. That problem needs to be solved. And will it be solved by a startup or more traditional company? We don't know. And honestly, it doesn't matter as long as somebody who just graduated from university and gets a job and gets a paycheck can go and get the healthcare that they deserve. The question is, for a startup to get funded to do that, they need to have the team, the experience, and the know-how to convince the investor that they're the ones that they should be bet on, right? I know Rosina just spoke, but Rosina, Yawar, their co-founders, they have vast different types of experience. when they go and talk to an investor in Silicon Valley, they see that there's management experience and technical experience. So for them to take a bet on this large industry is significantly easier. I know this is not a fun thing to say, but please, for a lot of young founders, the single best thing you can do is go work at a company to get experience, because it is hard. I think I explained it to somebody else recently in the best way possible. Imagine you're at dinner and your cousin comes to you who has just graduated college and says, "Bhai, give me $50,000 or 50 lakh taka, because I'm going to build this app and I'm going to save this industry." Would you do it if they had never worked in that space? Now, if you are coming from a similar position, put yourself in that shoe of that investor, would you say yes? Right? I think what we need to understand is there is a difference between the amount of money that wants to come into Bangladesh and the kind of companies that we are being put that we're putting in front of investors. I guarantee you right now, if you have your T's crossed and your I's dotted, raising money is not an issue for Bangladeshi startups, right? And I don't know how else to say this, but we need to upgrade the companies to get international investment. Now, the best thing about the market right now is the existence of Startup Bangladesh Limited. And what Sami Bhai and Hassan Bhai have done has been nothing short of incredible, because the step between the international investors and the beginning can now be solved by an organization like them. In addition, if you're at a very early stage, please don't forget Idea Project exists. They're giving out 10 lakh grants to go and test your idea, right? Communicate to Idea Project, get that 10 lakh grant, build out your prototype, start showing some traction, then go to Hassan Bhai. Hassan Bhai will look at you and say, "Hey, you know what? We can get to that next step." After you work with Hassan Bhai, then go to a VC or an angel investor and say, "Hey, look, we can make that work." Somewhere in between, you have Jawad and Nirjor at Bangladesh Angels, because there are Bangladeshis out there in the world, and by the way, BAN has a lot of non-Bangladeshis in the angel network as well, who are willing to take a bet. Build a relationship with the investor. So Rosie mentioned it briefly earlier. The reality is that when you invest, it's almost like a marriage. You're going to be with this person for 5 years. So if you just come to me and you ask me for money, and if I say, "Hey, you're not ready," and then you don't follow up, you have failed part of the process. What you're supposed to do is, "Hey, look, here's the feedback. You're not ready yet. Let's come back in 3 weeks, or sorry, 3 months. Here's an update. Paya, we took the feedback. This is what we changed. We looked at this weakness in our company and we have remedied that. I brought in a co-founder with experience in management or experience in distribution in this specific space. And now I think I can actually execute this." Then we see progress. Progress is very, very important for us as investors to see, because it means that you're taking market feedback and filling in your weaknesses. So to wrap up again, there is more than enough money right now. If you're not getting funded, it means you need to upgrade your product, unfortunately. I'm sorry if that's brutal, but somebody has to say it.
Thanks, Radhbhai, for being direct. You have to up your game if you need the money. We have a question from Julia in the chat room. So this one is for Radhbhai. Statistics show that Bengali underlie bias in global investments. What should foreigner do better, and how can Bengali support to overcome bias?
Sorry, Bengali bias in the investments? Like, as in we're not getting enough funding in Bangladesh?
I think it's talking about the biases in the global investments landscape, how Bangladesh is not seen as an attractive market, I guess.
So one of the issues that we had with Bangladesh is we are out of mandate. Now, let me explain what that is let's say you have a very wealthy investor in London or New York. When they look at investing in buckets, they think about Middle East and North Africa. That's MENA, that's a market. They look at Asia ex-Japan, that's basically East Asia. They look at Southeast Asia, and then they look at India. They look at Latin America. The problem with Bangladesh is that we're not technically part of India, as everybody here knows, But when people think about Southeast Asia, they also don't think about Bangladesh. When people think about Middle East and North Africa, they also don't think about Bangladesh. Now, how is that being remedied? What you'll notice is a lot of the investors who have been investing are actually from Southeast Asia. And it's because Southeast Asian VCs have been starting to stretch their mandate into Bangladesh. So you could argue Myanmar is the closest where they normally go. So we can go and build relationships. Nirjar does this quite a bit, where we say, hey guys, we're right next door. Come invest with us, right? Or invest in us. Similarly, MENA, which has been a widespread term for a very long time, recently there's a new term that's being used called MENASA. That's Middle East, North Africa, and South Asia. As this continues, we will actually start getting more and more allocations into Bangladesh. I can say that we are a New York fund that has offices here. I can actually tell you there is a London and another New York fund that's looking to set up offices in Bangladesh. This is a pretty big move that's actually happening slowly but surely. So I think the visibility for Bangladesh is increasing. We need to be loud out there. We need to talk about what the possibilities are. But most importantly, what we do need are winners. Respectfully, when you look at Indonesia or India, if I ask you what the 100th best startup is, does anybody care? Does anybody know? But you know GoTo, you know Traveloka, you know some of the biggest Indian ones. The brands of the countries are made by the biggest startups. So we need them to be more visible so people start saying, hey, ShopUp or Pata or whatever is doing really well. Why don't we find a younger startup in the same ecosystem that we can get into earlier? That's what will actually get us more visibility.
Thanks, Wildpie. That was very interesting. We have Nature here with us as well. Hi, Nature.
Hey, everyone.
Hey, great to have you here. We have a question from Salman Chaudhary, who's the managing director of Dalmashi Group. This one is from the investor angle. So he's asking, in order to excel as an angel investor in the Bangladesh startup ecosystem, what are the 3 key fundamental features that are essential for success?
I think, yeah, that's a good question. And hi, everyone. I think, look, I think the role that angels play is sort of that bridging role between the early phases of a company and institutional capital, right? And the right angel investor, whether it's in the case of Batao or ShopUp, have played that pivotal role, right? Where they were able to connect the company and founders to the right resources, whether in terms of team members, and second, the right, and investors as well, right? Follow-on investors. So I think a good angel is able to be, play that role with these companies where they see the potential of these founders, but at the same time, be a good coach to them. But then over time, I mean, that's the biggest value add you can give, is you could help generate new business. You could help expand the business by way of, bringing in the right resources and ideally capital. So I think that's also important, for angel investors. It's not enough to just kind of cut checks. What are you willing to do post-investment? And I think it's also important then, as an angel investor, especially as you're getting, this is also something we're thinking about as a group, as a company, as Bangladesh Angels. But I think also individual angels should also think about this: is how can I kind of build my network with these potential investors? How can I be sort of this bridge to this capital that wants to get into Bangladesh, but they're looking for deal flow. I fully echo what Rahat said, right? I'm currently in the US. I was in Singapore on my way here. You don't have to sell Bangladesh anymore. People want to get into Bangladesh. And I think you'd be surprised, when you talk to these international investors, how many companies they've talked to in Bangladesh. But the challenge is, I think, even within, the ecosystem, there's just still, I think, too many companies that are competing on the same business model, same kind of derivative business models, and therefore they're not scaling. They can't really answer that question of, well, if you're doing an e-pharmacy, how are you different from Aroco? They've already raised, they're already scaling. If you're doing an edtech, how are you different from Chico or 10 Minute School, right? So I think we also need to think about, as an entrepreneur class, what are the gaps that are being fulfilled at the moment by those larger players, because the market's expanding all the time. So there's obviously other opportunities, but I think we're always coalescing around these 4 or 5 key. I mean, I think Rahat and I were just having a WhatsApp discussion, right? There's at least 10 different versions of ShopUp in the market. And I think they're all, quote unquote, slightly different, to quote him. So what's the angle there, right? And they're all kind of competing for these early stage angel plus, early stage VC dollars. And I think they're all kind of struggling to answer that question. So I think it's also important to kind of, execution ability, but also true differentiation and being able to say, we're, fulfilling a gap in the market that in a way that no one else or, others are having a hard time fulfilling.
Thanks, Nijor. And as an early stage investor, I'm pretty sure you have met a lot of founders who are looking for co-founders, right? So we also have a question very similar here in the chat room. If you are working as a solo founder, how can you find a co-founder and how do you network with these co-founders?
I think if you look at, is that for me?
Yeah.
Sorry. I think if you look at most kind of co-founder type relationships, I think a lot of those happen over the course of like school, right? Or early phases of careers. So I think that's also important what Rahat said, right? Like, you got to look for, particularly if you're a young person, you've got time. I know it may not seem like it, but you do have time. And I think then therefore kind of look to get into these platforms. I think, working in your early 20s at a fast growing, scaling startup, I think is an excellent experience. And, even Rahat and I have funded companies where, the co-founders have met at a place like Pata, right? Then they went on and, saw an opportunity and they decided to do their own company, right? And I think that's also part of, what investors look for is it's, if it's a shotgun marriage where a co-founder or a group of co-founders only met recently and they're only here to kind of do this idea, that's a bit of a problem, right? We want to see sort of this track record to say, oh, you guys have worked together before, you've built things before, either on your own or, within a larger organization, and you have done things that we can say, well, there is a track record of execution. And I think that's also important, how long have you known each other? What have you done together, right? So I do think, and I think then that ties also to Rahat's earlier point about looking for these institutions that you can get plugged into. I think that's probably the best place to kind of meet co-founders, whether it's at school or the early parts of your career.
Thanks, Nijor. So we have been getting forward with a lot of questions in the chat room. I would request everyone to share their questions as well. And what we're going to do is we're going to ask these questions one by one to our panelists. I'll just quickly take note of Syed Manzurul Hassan's comment question. He's a co-founder of Kalahobe, which is a sports tech, and he's creating a platform, building connections with playing buddies, opposite teams, ground bookings, etc. So his question is the problem in the sports industry is less considered as a social impact. And how can they, as an only sports tech company in Bangladesh, raise and fight it? Anyone in the panel want to take it?
I'll just take it real quick. Worked 5 years in sports tech. I'm not sure what you mean by it's not social impact. I think if you look at the Chinese strategy leading up to their Olympics and post-Olympics, what we've seen is in most countries that are at an inflection point similar to where Bangladesh is, sports, social sports, plays an incredibly important role in improving and increasing the general morale of the public. So I think there is a huge social impact angle to sports. In fact, I think there's an amazing organization called Deshi Ballers that's in the country right now that's doing really great stuff for female basketball players. So I do not think that's an accurate assessment. That being said, also in terms of fundraising for something in sports, I think honestly, you just need to find somebody who loves sports. You don't need a VC. You don't need some rich international angel. You need somebody who loves sports and is willing to help you build a company. Let's not get too obsessed with, this investor, that investor. There are passionate people out there who are willing to work with you to do certain things. I think finding them is kind of half the battle, but they exist.
Thanks, Radhai. I think every market at its early stage is very daunting to get investments, but once you show the traction, it's bound to be there. We also have a question from Sapphire. She has asked that if funding continues to slow down in 2023, how can we uniquely position Bangladesh for global investors? Rosina, would you like to take that up?
So that's about the unique position. How do we position ourselves? I think for firstly, if funding's slowing down and you're looking to fundraise, you really need to think about your runway. As a founder, you need to know when you're going to run out of money. What is your burn? And if things are slowing down, if you had interest before and you don't have interest now, you really need to look at survival. You need to look at how you are going to come out of this. And you need to keep your investors up to date. You need to tell them what you're doing, as Rahat Bhai had mentioned earlier. Always follow up on these things. It's not a great market out there at the moment, but we're all in the same boat. But really, I would say to position yourself as a startup, you need to really look at your runway. You really need to look at where you're spending. Do you really need to be thinking about growth right now? Or do you need to be thinking about survival? I think that's kind of something that you should be considering.
Mihad, if I may add a little bit to what Rosina said, so all the great points Rosina mentioned. So, I mean, Rahat touched upon it earlier a little bit that we have a lot of capital in Bangladesh, right, for the startups. So that's why we are not tapping a lot. I mean, we don't have to depend on all the global investors. I think last year or year before, 95% of the investment in Bangladesh was global investment. We had you guys keep track of all this data. You correct me if I'm wrong. I mean, vast majority global investor. A startup ecosystem cannot thrive just looking for global investment, right? It never happened in anywhere in the world. We have to tap into the investment in Bangladesh. There are a lot of opportunity. A lot of big angel investors, big corporate owners, they hardly understand how the whole startup works, right? There's a lot of untapped opportunity in Bangladesh. And from the startup owners perspective, we are trying to get into that, like a different corporate ventures, they can invest and all those things, how to bring awareness to the angel investor when we have them all. So I think that's why we should depend on from the startup founders. They should also look within the border of our country. They, from their network, their connection, they should look talk to the well-off investor, and they'll be surprised. You'll find a lot of investors. So I think we should look inward instead of looking outward during this downturn, at least.
That's fantastic what you have added on there. It's not just only about international funding, but we also have a very vibrant local investment landscape. So we just need to tap and make that investor group much more active. Nidra, would you like to add anything? I think he just got disconnected. Well, I have a question for Rosina. We got this question that's very interesting from Shafiul Islam Ifas, who's the CEO of our Academy, and Tamim Asif, CEO of Mind Vana. So they have asked that what kind of measures can startup founders take to safeguard their tech-based product or services ideas from being replicated by other competitions, especially the ones who have much substantial funding?
Sure. So I think the hard reality is there's little that you can actually do about it, but you can actually use it to sort of your advantage. If there's competition, it actually means that there is a demand in the market. So you yourself as a founder and as a startup, you need to think about what differentiates you, what differentiates your business, what makes your offering better. A competitor could come in with inferior tech, but actually a better, more efficient or convenient, unique service. So the focus is really on what you're doing and what you're offering to sort of stand out. And once you have that sort of magic or that secret sauce, as they like to call it in tech world, this can actually help differentiate you and actually position you to be in a better place to fundraise. And then the point about having more capital or getting someone with deep pockets coming in, just because you have more capital doesn't necessarily mean that you can deploy and execute. Yes, you could hire 100 tech people to build something, but you need to then have operations, you need to have demand, you need to have marketing. There's so much more to it than just being worried about someone who's raised bigger than you. You really need to focus on what you're offering. And also superior tech doesn't necessarily mean that you've won. You have to have that go-to market to support it and all the things that come around it. The last point I would mention is that if someone does come into the market and is doing the same thing as you need to take advantage of the time. So we, for example, first to market, we've got 2 years in. So if anyone does come in, they have 2 years for us, we have a 2-year lead to maintain that kind of leader position. We have solved for problems in the market. We have seen what things have gone wrong. We have solved and fixed efficiencies and delivery and all that kind of stuff that comes with what we do in our business. That startup coming in also has to go through that same journey. So you should take advantage of the time it takes to actually not just come in with tens of millions of dollars, but actually the time it takes to actually execute a good service. So that was just my last point there.
Thank you, Rosanapa. So there are always going to be competition in the market. That shows that there is a
competition is actually healthy. It makes you focus. It makes you work harder. I always believe in competition.
And it also validates that you're doing the right thing. Otherwise,
Absolutely. Yeah.
if you have no competition, that means that the market is trying.
Yeah.
So we are in the last 10 minutes of our session. So we are just going to nominate everyone who has questions to ask it directly. I see Marupai, he's raising his hand. Marupai, if you'd like to ask your question.
Thank you so much. Am I audible?
Yes.
Thank you so much for giving me the opportunity. So I have a observation and also the question. First of all, I want to talk the observation from my end. First of all, I want to introduce myself. Me, Mohammad Maruf Hassan. I'm the CEO and founder of Maruf Digital Academy. I'm running a digital academy in the northern part of Bangladesh. It's called the area and the district is Thakurgaon. So I'm talking from from my office. By the way, so I have a question to Ms. Rosina. Thank you so much for your wonderful service, Arogo, because I'm using this app before from the very beginning. So when I was in Dhaka, I use it, and I like it very much. And my family members are using that, so that's fantastic. Okay, so my observation is healthcare related. Okay, so my area in Thakur, there are lots of patients. They are very much actually dependent for Indians doctor. Okay, so their observation is Indian doctor is actually they're very much caring. They are giving very much caring treatment. Also the medicines also. There are lots. I think I'm in my personal observation. Last 1.5 year, there are 3 diseases actually. Patients is very much increasing in my area. One is diabetes patient, the blood pressure patients, and the mental health related patients. So what could be the services? Because of right now there are in the Bangladesh is very much increasing in digitalization and the ICT sector. So we have smartphones, internets, and lots of things also. So I want to give these patients or the consumers or the customers the service through these 3 types of patients, that they will take one kind of one solution, 3 solutions by one platform, right? So how do you think, Ms. Rosina, that it would be effective for a because I'm in a rural area right now, so what could be my approach and what could be my actually the startup journeys? And so I take some surveys. I took some surveys. They are very, very much appreciated for me. But what could be my investing, the funding rising, and also the perspective. So thank you so much for that.
So can you just explain just the question part of what you were saying? I understood that you were talking about three parts of the healthcare side of things, but what was the actual question side?
Marupa, you have to make your question. It has to be told in 10 seconds, no longer than that.
Oh, I think he's gone.
Hello?
Marupa, you're there, but you have to ask your question in 10 seconds only.
Hello, yes. So, can I, So
Yes, if you can just
my-
ask the question.
Okay, so I want to launch a startup that's actually deal with that service will deal with 3 diseases, right? One is the diabetes patients, number 2 is the blood pressure patients, and number 3 is the mental health patients. Okay, so what could be the approach for my end? Okay, for the rural people, those actually they have the technology, they have the internet, and they have the smartphones, but are they ready for getting the service or
Okay.
not?
Okay, I understand. So you've come up with an idea. You've got 3 focus points that you want to explore: the diabetic patients, the people with mental health issues, and the other space that you mentioned. You actually need to see if there's demand for your product. You could have a great idea, but it might not be a business idea. So you need to go out and actually, with some bootstrapping of your own money, to actually see if this idea holds water. You need to, before you even look at any investors or any angel investors or even friends and family money, you need to actually be able to see, does your idea actually work? There are lots of ideas out there, but then it's not a business idea. But then even when you have a business, it could be great business, it could generate some money for you, but is it a scalable business? When you're thinking about a startup, you really need to think about scalability. It's not just about, okay, I've got an idea, there's some demand, I'm going to make some money. When you're thinking about startups and looking for investments, before you're even thinking about that, you need to think about scalability. But it seems like you've got an idea, you go out there, the grant that Rahat Bhai had mentioned, where they give you some money, and where you can actually build something, go out there, test the market. You need to do that first. I think that's your very, very first approach. And you need to be extremely clear in what it is that you're trying to do. So you've mentioned 3 areas, but what are those 3 areas? Is it an assessment? Is it medicine? Is it what is it? Is it consultation for mental health? So you need to be extremely clear about what you're doing. And then if there is demand, you'll have traction, and then you should have a positive journey going forwards.
Thank you, Rosanna. We have a couple of
Thank you so much for your answer.
as well. So we have this question from Mihir Pai. He's asking, what are usually the exit strategies for local investors that entrepreneurs need to be aware of before taking an investment deal? Rahat Pai, would you like to give a quick?
Sure. So realistically, there are only 3 types of exits. One is that you get acquired. 2 is you IPO internationally or locally. 3 is you sell the share to another investor in a future round, or even now, but usually in a future round. In the history of Bangladesh, we've never had what we would consider we've never had an IPO exit. The closest thing is Augmedix, which IPO'd in San Francisco a couple of years ago, which is a San Francisco-based company where majority of its employees are Bangladeshi, and the founder is also half Bangladeshi. And then we had NewsCred, which changed its name to Welcome, that was acquired by Optimizely about 1.5 years ago, where about 80% of its company is Bangladeshi. That was an acquisition. Other than that, the market has not really seen any kind of serious kind of exits, which is okay. That's normal. This is a young ecosystem, so we will need to showcase that. I shared an article in the chat about Bahubrihi, which is a startup by Buet grad Piyash, amazing founder, who built a product that was good, and then Shahir, the CEO at Chico, which was venture backed at that time, looked at it and said, hey, you know what? Not only is what you built good, but we can help you scale this much faster, and we'd love to come and join you. That was an exit because there was an acquisition in the local side. Now, one of the issues is we have this idea that every company needs to get acquired internationally. That is not true. If you build a good business domestically, there are probably people who are willing to acquire you. In fact, I think as you have more venture-backed startups, they will start doing the acquisitions. I'm sure Rosie can comment on the Argo side. Rosie, actually, why don't you answer this? Like, you would probably acquire something that makes sense, but that product needs to exist.
Absolutely. If we want to become a health tech platform, so if there are other health services being created with another startup, it would just make sense to absorb vertically rather than build our own.
I'll add one point here, and this is the part, and Nirjor mentioned it briefly earlier. I think there's this idea, and in ed tech, this is actually hugely problematic, unfortunately, and I'm not trying to be negative. This is just factual. We have to think when there are founders that have capital, right? They ask themselves a very simple question: can I build this on my own with more money, or with the money that I have, right? Instead of acquiring, because an acquisition takes time. It takes time to integrate all this stuff. So if you want to have a substantial amount of value for an acquirer, you need to either be, as a manager or a founder, exceptional. B, you need to have a large customer base that cannot be acquired easily. Or 3, you need to have technology/data that is irreplaceable or gives an acquirer anywhere from a 6 to 12 months head start. If a company can replicate your product with more capital and new hirings in 3 months, you are likely not somebody who will be acquired.
I'm just going to poke Hassan Bhai on this topic as well. Hassan Bhai, what do you think on this?
Yeah, I mean, as Rahat said, the exit strategy perspective, like the IPO and acquisition merger, right, and a strategic sale, etc. And this will add our ecosystem.
Buyback, right?
Yeah, buyback, obviously. Those are more of a internal kind of non-public kind of way, right? So as our ecosystem develops, and within few years, I see a lot of this thing will start happening, right? Like Rahat mentioned that Shikha working with Bobri, some kind of acquisition. And I think some of the startups, biggest startups also have done some, like Chaldal has done some acquisition also. And so this will happen. And from the IPO side, this is a very important one. We need to show some startup going IPO, especially to the global investor. Right, so we are working with a couple of startup Bangladesh. We are doing with the SEC to bring as a pilot one of the startups to IPO, and then followed by additional ones. And there are a lot of regulation, a lot of policy, a lot of criteria, the changes has to happen to get that done. But we are definitely on the path to do that. So without zero IPO, that becomes really challenging to convince global investor, international investor about the exit. Secondary sale happens, but secondary sale is not the best option for exit for the big investors, right? So those are the things. But as our startup ecosystem, what, 5 to 7, 8 years old, so to speak. So another few years, I see this kind of exit, a lot of exit organically will start to happen. So that's what I see is happening.
Thanks, Hassan Bhai. We already see a couple of this merger and acquisitions happening. Definitely, we will hope that this gets accelerated in the future. And with that, we have hit the end of the session. But before we close this, I would like to get a closing remarks from our panelists. So Rahat Bhai, Hassan Bhai, Rosina Appa, Nirjor, if you could share your final thoughts on the startup ecosystem.
I will start. I mean, as we know, that the startup ecosystem investment landscape is having some challenges, right, to raise funds and etc. globally because of economic downturn, Ukraine war, and etc. Then recently, last couple of days ago, we heard the Silicon Valley Bank was in a trouble, but the government is kind of bailing them out, which is good. But that's isolated situation. So again, as I mentioned earlier, that it does not mean that our startup ecosystem is going to suffer. I will reiterate that our startup ecosystem, we have enough capital in Bangladesh to support the startup ecosystem. So there's no reason to be discouraged by global issues, right? As long as it doesn't hit home from this investment perspective, I think we should be fine. And I continue to encourage all the founders to come up with good ideas go to ICT for the idea project for grant, then come to Startup Bangladesh, and other in the VC firm like Anchorless Bangladesh and BAN, the Angel Network, the fun would be there. If you have a good product, I think you will find fun. It will happen. So I wouldn't be discouraged by any of the economic condition, globally or Bangladesh, so to speak. That's all
Thank
I
you.
had.
Rahat Bhai, would you like to go next?
Sure. Yeah, I'll just say something that I've said before and then kind of cap it off. Just remember, there's a lot of glitz and glamour to fundraising, especially international money. But at the end of the day, none of it matters if you don't build a good business, right? My job is to take risk, but I can make 10 to 15 investments. So if one of them doesn't work, it's okay. This is your life as a founder, right? This is important. So you want to make sure you're building a really good business, right? There's a little difference here. As a former founder who spent 5 years running a startup, the stress that I felt as a founder was significantly worse and different than as an investor. I have the luxury of saying, hey, you know what? I've got other companies, right? You don't have that as a founder. So building a good business is the most important thing. So also remember, when you are thinking about these international money, right? When somebody wakes up in Singapore or Tokyo or London or whatever, they're not saying to themselves, I want to invest in a Bangladeshi startup. They're saying, I'm going to make an investment in what I think is going to have the best return for the risk I'm going to take. That means they're comparing the company in Bangladesh to the company in Indonesia, to the company in Vietnam, to the company in Saudi Arabia. So what you're building has to be as good, if not better. Keep that in mind. Now, on a positive note, let me very clearly say this. I think this is the best the startup ecosystem in Bangladesh has ever been. The founders are getting better. The companies are getting better. More and more money is looking into the market. So what I would highly recommend is knowing what your strengths and your weaknesses are and making sure that you choose to take this journey at the right time. And I think for a lot of founders here, that either means maybe not going for venture and just building the business in a more sustainable manner, or B, going and working at a startup, getting the experience of working at a faster paced environment, and then building the relationship so that you can then spin off and do your own thing. Thanks, Matt.
Right. Rosina Appa?
I would just have some closing remarks on just really think about your idea. And when you're speaking to an investor, be super clear. It's amazing how quick somebody can be to judge without even hearing your pitch deck. So be super clear with your communication, practice. I started doing some sessions with Nidro in Bangladesh Angels where we're looking at pitch decks. And I sometimes say that if you're saying a sentence and it adds no value, don't say the sentence. It needs to be short, sharp, snappy. You don't want this long, draggy deck. Always think about your communication and always think about your presentation. The last thing I want to say is that the startup community in Bangladesh is actually super exciting. There's lots of founders out there. There's a lot of energy out there. Meet with them, network with them. You never know when a conversation could literally change your life in your startup. It could open a door to investor. It could open a brand new part of your startup. It could mean a new hire. So share your information, find a mentor. Really pull on the actual ecosystem itself. It's actually a really exciting place. And if you don't ask, you simply won't get. So yeah, that's my last remark there.
Thank you so much, Rosina. I don't see Nature in the room, but we're very happy that he joined at late night of his time. And with that, we are going to close this session. Thank you so much, everyone, for joining today. We heard some really incredible conversation here from our startups and our investor panels. And we hope that you take this knowledge and understanding with you and use them in your life. Thank you, everyone. Take care. Assalamu alaikum.
Bye.